Welcome traders and investors to our weekly trade analysis, where we provide insights into the market and help you make informed trading decisions. This analysis is based on our supply and demand system, which incorporates an algorithm that identifies crucial levels and future trends. Our price estimates are derived from data collected from the IC market platform. Let's begin with the analysis of gold against the US dollar. Gold struggled to break the critical level at 1961, as highlighted in our previous analysis. It experienced a decline over 4 consecutive days last week and closed just above 1914. The upcoming trading sessions will be crucial as gold hovers near this level. The 1935 to 1914 demand zone has historical significance, and the recent price action suggests that major players are actively involved. The price of gold could either hold and bounce back up or continue its descent along the previous path. It's worth noting the formation of a triple top pattern at the 2067 level, indicating a potential price reversal to the downside if gold fails to hold at 1914. The critical levels to watch on the daily chart are 1990, 1961, 1935, 1914, 1885, 1858, and 1837. Moving on to the Euro-US dollar pair analysis in the 4-hour timeframe. The Euro-US dollar pair failed to sustain its momentum and fell below the resistance line at 1.09720, down -0.57% in the last session of the week. The pair closed last week's trades within a crucial demand zone at 1.08987 to 1.08410. Although the overall trend in the 4-hour chart suggests an upward trajectory, bulls must assert dominance within the current demand zone to maintain control. The failure to advance beyond 1.09720 aligns with the previous moving average convergence-divergence signal, adding to its significance. If the pair fails to hold at 1.08410, a retest of the support line at 1.07600 becomes probable. On the other hand, a successful breakout above 1.09720 could pave the way for a retest of the supply zone at 1.05301.11107. The major levels to watch in the 4-hour chart are 1.1184, 1.1110, 1.1053, 1.0972, 1.0898, 1.0841, 1.0760, and 1.0686. Now let's examine the US dollar index, DXY, in the 1-hour timeframe. The US dollar experienced a remarkable recovery last week, bouncing off the 101.614 to 101.718 demand zone and forming a double bottom pattern. After a 2-week decline, the index closed Friday's trades at 102.500. However, the price reversal was halted at the 102.757 supply zone, raising doubts about the sustainability of the recovery or whether a consolidation phase is underway. To make another attempt at the 102.757 to 102.861 supply zone, the index must maintain momentum above the current demand zone at 102.376 to 102.480. Failure to do so could result in a drop towards 102.245 and the 102.100 to 101.955 demand zone. A successful retest of the supply zone would increase the chances of further upward movement. The critical levels to watch in the 1-hour chart are 102.861 to 102.757, 102.626, 102.480 to 102.376, 102.245, and 102.100 to 101.955. Moving on to the US dollar JPY pair analysis in the daily chart. The US dollar JPY pair continued its bullish run, closing positively at 143.690 and marking 2 consecutive weeks of gains. Since breaking out at the 131 to 133 demand zone, the pair has maintained its bullish momentum for over 3 months. However, approaching critical levels at 144.832, 147.670, and 149.900 may introduce volatility to the market. The current price structure in the daily chart shows an attractive progressive W pattern, indicating the potential completion of a reversal pattern at the supply zone of 147.670–149.900. The US dollar must hold above the resistance level at 144.832 to achieve these results. The major levels to watch in the daily chart are 149.900, 147.670, 144.832, 141.700, 139.470, and 136.632. Next, let's analyze the GBP US dollar pair in the daily chart. The GBP US dollar pair has been experiencing significant volatility, as depicted in the daily chart. The recent attempt to break the 1.2804 to 1.2920 supply zone during last week's trades was unsuccessful. However, if the pair can hold at the 1.2657 resistance area, we might witness another bullish effort in the upcoming trading sessions. If the pair falls below the resistance line, the critical demand zone at 1.2495 to 1.2379 could come into play. The current price structure in the daily chart demonstrates a consolidation pattern at supply and demand zones before a breakout occurs at the supply zone. If this pattern repeats, the price may decline towards the current demand zone at 1.2495 to 1.2379. The critical levels to watch in the daily chart are 1.3082, 1.2920, 1.2804, 1.2657, 1.2495, and 1.2379. Finally, let's delve into the analysis of the Australian dollar against the US dollar in the daily chart. The Australian dollar recovery turned into a free fall, as it failed to sustain momentum above the 0.6898 resistance level highlighted in the previous analysis. After reaching the supply zone at 0.6898 to 0.6813, the pair underwent a significant decline during last week's trades and closed around the 0.6693 resistance level. To avoid further decline, bulls must defend the 0.6693 level. Failure to do so could open the door for bears to continue their attack, potentially driving prices down towards the demand zone at 0.6584 to 0.6499. However, if the Australian dollar holds around 0.6693, a retest of the 0.6813 level becomes plausible. The critical levels to watch in the daily chart are 0.6813, 0.6693, 0.6584, and 0.6499. In conclusion, our analysis of gold, euro, US dollar, DXY, US dollar, JPY, GBP, US dollar, and AUD, US dollar provides valuable insights into the current market trends and crucial levels to watch. By employing our supply and demand system, which incorporates historical price action and technical indicators, traders and investors can confidently make informed decisions and navigate the market. Whether you are a day trader, swing trader, or long-term investor, our system can guide you in planning your trades effectively. Take advantage of the available tools to enhance your trading strategies and maximize your chances of success. For more information and to access our supply and demand system, please follow the link below.